Very excited to welcome back Andy Schectman to the show. As the world, the nation, everything gets more and more chaotic. We're going through some news headlines. Welcome back, Andy.
Elliot, good to see you, brother. It sure is getting more chaotic. It's like a reel of tape, like the old movie reels. As they get closer to the end, they start to spin faster and faster and faster. And kind of how it feels with so many things coming at you from so many different angles. And it used to be these types of headlines that we see all around us were very intermittent. We wouldn't see them very often. We would have these bombshells that would drop once a blue moon, and now it just seems every single day stories are just non-stop in every area of life, from political to social to moral to economical to geopolitical to philosophical to, you name it. It's just everywhere. So yeah, good to be here, good to talk, and I always look forward to our conversations. So thanks for having me back, Elliot.
Absolutely. So we'll just dive right in. You have one of the greatest investors of all time, most successful, best track records. Paul Tudor Jones says he can't think of a worse financial environment for stocks or bonds right now. And why he's saying that is because he's saying that in the past, the Federal Reserve has been able to ease monetary conditions during economic slowdowns, but now they are tightening monetary conditions in economic slowdowns. So what is your take on this environment?
What he's talking about is that you are tightening into what appears to be the beginnings of a recession. Why do I say the beginnings of a recession? Let's look at the numbers. Let's talk about the S&P 500 first. Over the first 4 months of this year, the S&P 500 is down 13%. That's the worst 4-month period for the S&P since the beginning, or when we talk 4-month period, the worst 4-month beginning of a year, first quarter, since 1939, since the Great Depression. And those numbers, Elliot, are not even adjusted for inflation. When you adjust for inflation, it makes the stock values collapse as prices keep rising. So when you adjust for inflation and look at the rising prices, those numbers are much, much worse. You look at the Russell 2000. The Russell 2000 is a much more broad snapshot of the economy, and it's more reflective of the US economy because you pull out of the Russell 2000 the majority of the big multinational companies. And so you have a more accurate reflection. Well, the Russell 2000 is down 11.5% on the year, but 23% from its high last year. So a greater reflection of the US economy shows that you're about to witness a very bad recession, heading into perhaps a depression or stagflation, maybe hyperstagflation, where the economy is massively slowing down. All indicators are slowing down. Personal savings are at lowest levels ever. Equity prices are dropping. Real estate prices are about to really crater, especially as rates rise. You've already seen, without the Fed doing anything, just jawboning has pushed interest rates on the 30-year from 3% or just under 18 months ago to 5.5% now. You are witnessing the end of the great bull market in real estate if this trend continues. And what he's talking about is that in this environment, in years past, the Fed has come in and lowered rates and eased. They do that now, the world reserve currency goes nominally negative, and that is a very, very, very big no-no. It ain't gonna happen. So they are tightening right now. And they'll continue to tighten to give them latitude. Now, where the rubber meets the road is a lot of people think when the shit really hits the fan from this tightening into a recession, that they will reverse course and go back to monetization of assets, to quantitative easing versus tightening. And that's where they lose all credibility in my mind. But in any case, what Paul Tudor Jones is saying is that this is the first time in this environment where you are seeing a Federal Reserve telling us they are tightening into a recession instead of being more accommodative.
I guess moving on from this, the key kind of fly in the ointment to the financial markets is inflation. It's causing serious problems. We're starting to see bad symptoms of this kind of manifest themselves. So from coffee to ketchup, retailers seek price shields as inflation runs riot. Okay, France's biggest retailer said it would identify the 120 items consumers buy most, and they would guarantee the price of those items from May 4th until July 4th. So they are literally putting in price controls, and this could be just the first of many as other retailers, other governments try to do the same.
Price controls don't work. Price controls, they create no incentive, number one. In other words, when you cap price, you are not creating an environment where you're incentivizing quality. In other words, if you cap a price on something and it costs more to make it, you are accepting an inferior quality product. So I'm talking in general, mostly on governmental price controls. But when you talk about a retailer doing this, it becomes very dangerous because, in essence, what you're doing is, the retailer's going to subsidize what he's saying, or they're saying, going to subsidize any price increases due to the cost of inputs increasing. You look at the cost of all the raw materials going up, it has to be passed on. And what you have happen at the end of that price control, where they put a time frame, it's called catch-up price. And it's ironic that you said ketchup in terms of one of the things, but ketchup as in CATCHUP instead of KETCH. So you're talking catching up, and the price slingshots. The minute they release the price controls to catch up, you create real big problems. This is the kind of thing that could put a retailer out of business or lose all credibility if all of a sudden inflation skyrockets for whatever reason. Now, I could give you reasons if this were here at home why that would be lethally dangerous, because I truly do believe that the dollar is on the cusp of losing its singular world reserve status. And Jerome Powell has even acquiesced to this, saying there's room for more than one reserve currency. And you and I have talked about this at length as it pertains to its petro reserve status, and more things keep happening, mind you, with that. But bottom line is you have a retailer that's basically saying we're going to subsidize these prices. It's a way of advertising, I guess, and ingratiating themselves with the public. But in reality, it is not something that is sustaining. And that's why they're putting a limit on it, because in a world where inflation keeps rising, and I don't think we're anywhere near the end of inflation, that's very dangerous.
Exactly. So I guess the question would be, will the current leadership facing removal, in an election year, you cannot get reelected with markets like this. You were saying how stock markets are down double digits. Well, what are all the baby boomers 401ks doing right now? It's not a good situation when they're all trying to retire. So hard to get reelected. Do you think they will try any gimmicks like this, any sort of price controls, any sort of market manipulation to try to stay in power?
Well, price controls are certainly the lesser of two evils instead of runaway inflation. But, and they may, I think that it is proven, we've seen it before in this country, and it's proven that it doesn't work. I could see them trying to cap energy prices, less, food and that kind of stuff, but I could see them trying to cap wages and energy prices the way they did before. But no, I think ultimately we're too far down the rabbit hole, and the world is too globalized. And, when you talk about the things that have been put into place by this administration, just the shelving of all of the domestic energy resources in and of itself, make it very difficult for us to cap prices when so much of what we accumulate is imported, and we have such little in the way of domestic production that I think it makes it very difficult. But it is the lesser of two evils, and it wouldn't surprise me. I've talked about this before on previous podcasts where you may see that over letting prices run away, but ultimately then you have the catch-up inflation, and you have the lesser quality, and you have the de-incentivizing ingenuity and being industrious. So I don't know. I don't think it's probable, I don't think, but it's possible. And here again, it's a Band-Aid that ultimately doesn't do much. It's only going to make the outcome worse in the end.
Wow, so that's a good point to look out for investors when they see that, because guaranteed it's coming. It is a band-aid, like you said. People will try it when they see that, not to just assume that inflation's going away.
Right.
Okay, great. Well, one other kind of situation that is impacting financial markets is this European war. I know that Europe is looking to kind of try to ban more resources out of Russia. You have OPEC saying that there is no hole that can be filled if you remove Russian oil. And so it's just going to cause inflation to spike even more. Do you have a take on kind of like where this conflict is leading us in terms of financial markets?
Yeah, there isn't a hole when you talk about Russia being the second largest exporter of oil in the world, the largest exporter of natural gas in the world. There is no hole to for that to be fixed or band-aid to cover that hole. And I think that the unintended consequences of weaponizing the dollar and pushing Russia out of the SWIFT system and trying to make it impossible for them to sell their oil, putting a ban on their natural gas or whatnot, will have great consequences. I think, you're already seeing Russia talking about backing its currency with gold, which would make, would represent a massive, drastic change. There are no countries any longer that adhere to the gold standard. And I have said for a very long time that I believe a new global monetary system will come out of the East, Russia, China, India, Saudi Arabia, other countries with commodity-backed sound money ideas on one end, backing your currency with hard commodities. Russia said they want to back their currency with gold and a basket of other commodities, versus our Western fiat, infinite printing Western system. I think you'll see this really have profound impact on ultimately the value of the dollar as countries are going to move away from this fiat-backed system. And I think Russia has kind of opened the door to the reality of how important it is to have some sort of a governor backing your currency. If you have nothing but a printing press standing behind it, you are creating what ultimately is a very large problem. And I think Russia has realized this. If you look at the value of their ruble since they announced backing it by gold at the beginning of sanctions, it's actually higher than when it was before the sanctions were put on. So their sanctions have done absolutely nothing. And the sound backing of the currency has basically rendered the sanctions completely moot. Bottom line is simply this. I really do believe that Russia and China are now closer than they've ever been, with being unified in their interests against the United States. And when you look at the Belt Road Initiative, connecting 75% of human population, using the digital yuan, where there was a report just the other day on out of CNN.com that showed on the second half of 2021 that the digital yuan had already cleared over 8 billion worth of transactions. It's working. And they are using it to back the Belt Road Initiative. So you have Russia and China unified in their relationship with Nigeria, with Saudi Arabia, sidestepping of the dollar. And I guess what I mean by that is that Nigeria has already agreed to sell their oil to China for yuan. They're part of the Belt Road Initiative. Russia has already pledged joint military cooperation with Nigeria and Saudi Arabia. That is what gives the dollar its hegemony, its world reserve status. I ask people every day, Elliot, what makes the dollar world reserve? And no one can ever answer it. It's really crazy. No one answers it. Nobody knows. Even the people I talk to in this industry, they don't know. And it is the protection of the Saudi kingdom and OPEC that gives the dollar its world reserve status. So what you are seeing is a move away from the Western system of the dollar being the petrodollar. You're seeing Russia just strike a deal with India for military equipment, only to be paid in rupee and ruble. You're seeing Russia strike a deal with China to sell their oil, their natural gas, and their coal for yuan. You see Nigeria just did the exact same thing. They're being protected by Russia. They are selling their oil to China for yuan. You are seeing Saudi Arabia being protected by Russia, selling their oil to China for yuan. All of these yuan payments are courtesy of the yuan petro bond. And it's a bond denominated in yuan that is convertible immediately into gold on the Shanghai Gold Exchange. We want to talk about sidestepping sanctions. You're seeing all of these countries, the BRICS nations, Brazil, Russia, China, India, South Africa, and others like Venezuela, they are signing up not only to the Belt Road Initiative, which is connecting 75% of the world through commerce, agreements, unilateral agreements in military and in energy that used to settle in dollars. Look at the second largest exporter of oil in the world, no longer settling in dollars. Are you kidding me? I mean, it's over for the dollar, and those are the unintended consequences. Those are the real problems that will arise from this situation. So, when you talk about the periphery, the periphery are the things that you just mentioned, and the inflation in Europe as a result of, Europe trying to stay away from the Russian natural gas or whatever. Look, the bottom line is simply this: the world is moving away from the dollar, and it is because of the weaponization of the dollar and the sanctions that we've put on that ultimately will lead to the dollar losing its singular world reserve status. And it's happening in real time right now, in real time. And it's not what Russia is doing. Russia will be the villain that the US and the West can point at for doing this. It is what we have done to Russia that has precipitated what ultimately will be the removal of the dollar as a singular world reserve currency. And say what you want about the horrors of war, but when you got Nancy Pelosi going to the Ukraine to meet with their president Zelensky and say, we will stand behind you to the end, and giving billions of dollars to their army and giving them Javelin missiles and Predator drones and funding and giving them military intelligence, where to drop the bombs. I mean, so what? So we don't have our soldiers on the ground. This is, as far as I'm concerned, we are this close to being dragged into World War III with a nuclear power, with a man who's got cancer and Parkinson's. You're talking about, what does he have to lose any longer? What does Russia really, if he really wants to fight back against the West, a guy that his life is coming to an end? Do we really want to start playing these games with a nuclear powered country who has already said if they're backed into a corner, they'll use the nuclear option? Now let's hope they don't. But when you see what the West is doing, I mean, we're doing everything but firing the guns ourselves. And as far as I'm concerned, switch the tables. Imagine it was Mexico that the US was fighting with. You have Russia funding them, selling them drones and missiles, and providing intelligence on where to bomb in the US. Would we think Russia is in a war with us or not? And I would argue, hell yes, we would. And so the provocation of war, we're this close, pushing them out of the SWIFT, confiscating their assets, doing all of these things are precipitating the end of the dollar as the singular world reserve currency. And the ramifications of that will be extreme as they come flooding home, creating a rise in interest rates. And now you have your villain that you can point to for everything blowing up. There's your great reset. Everything happens at once like that. And you're seeing the signs of food shortages everywhere. What is Russia the largest exporter of, in addition to natural gas, and the second largest exporter of oil? They're the largest exporter of potash and fertilizer, which you need to grow crops. And so you have a shortage of fertilizer. You have all the farmland being bought by Bill Gates. You have 18 food processing plants that have burned down in the last several months. 18, is that a coincidence? To go along with the narrative of food shortages, to go along with no fertilizer. You want to talk about a reset, you want to talk about pain, you want to talk about what could happen, you want to talk about why the hell you own gold and silver. Gold and silver you do not buy to get wealthy, you buy because it is wealth. And we are this close to experiencing a religious experience in this country. And I don't think people get it, Elliot. I really don't.
Absolutely. And, the last time we had a stagflationary environment similar to this, maybe not as bad, but similar, was 1974. That was the last big shift in the dollar as a reserve currency, the status, how they kind of, what left gold. Well, here we are entering a new phase. Gold absolutely skyrocketed back then. I guess that was all just market sentiment, but in this environment, what do you see happening to gold? And, you are CEO of Miles Franklin. So where could people get access to it?
In previous markets like this, first of all, you didn't have the massive amount of debt that we have right now. And you could argue that they were more issues of credit, not an issue of the dollar losing its world reserve status. And so, you look at previous inflationary problems, they're nothing like they are now. The indebtedness, the fact that the savings rate in this country is nearly at all-time lows, and as inflation continues, it will erode all the savings people have. You're talking all-time lows in savings, all-time high in debt. You're talking about a currency that will be usurped or forsaken as the singular world reserve status. So what you're dealing with this time is very different than what you've dealt with in the past. In 2008, when the market collapsed, it was all about credit contraction, credit problems. This is well past that credit problems, which you'll see. Look, we're so indebted, and I think this time it will be about a currency collapse, which makes owning gold and silver more important than ever. Very often in previous market collapses, we've seen gold and silver get hammered. And the popular narrative is, well, it's a rush to liquidity because there's margin debt, and gold and silver is very liquid. So when people get margin calls, they sell their gold and silver. Well, okay, that's bullshit. Let's just call it. It's the same bunch of crap that we've seen for the last several years. It's the US government wanting to keep the greatest challenger to the hegemony of the currency, that being gold, on the sidelines by shorting it, by pushing it down, by keeping it down. It is the ultimate spotlight on the fragility of the Western system. And so when the markets have collapsed previously, they smack gold with futures contracts to delink the rationale of people leaving the system. Yeah, don't look here. You don't want that stuff. It doesn't perform when things are bad. They want people to lose that in their psyche. It's not a rush to liquidity. It's the Western banks trying to make things paper over problems like they're so good at doing, and make things seem better than they are. Ultimately, gold and silver, they will really show themselves for what they've been for 5,000 years, and that's wealth. You shouldn't own it to get wealthy. You should own it because it is wealth. Wealth, as I've said on your show before, that has outlived 2 world wars, German hyperinflation, the Great Depression, and every pandemic. And this time, you could argue this is the most serious of them all, and that is of a complete and total currency collapse. And I think ultimately that's where we're heading. In terms of getting in touch with us, you would send an email to info at Miles Franklin. You would put the early stage investor in the subject line. We will send you an updated inventory. Will make sure that your listeners get the best price in the United States. We will personally answer their questions and work hand in hand with them. We do things old school, as I've told you for a while now. We have a new website that's on its way to being completed, but I still prefer precious metals in the analog capacity, no matter how digital the world gets. So for now, it's a phone call. Give us a ring. Send us an email. We will make it a good experience and help your listeners add a little bit of security and insurance when it's never been needed more.
This discussion is for informational purposes only. Please consult a certified financial planner when making any decisions about investing. And do your own research before making any decisions. Investments are risky, and you can lose lots of money in them.